I'm going to tell you something that will make half of you uncomfortable and the other half angry. And that's exactly how I know it's worth saying. Right now, as we sit here in this comfortable room, the dollar, the supposed bedrock of global finance, is weakening like an old man's knees. Metals are rallying as if someone just discovered that gold can't be printed by Jerome Powell's magic money machine. And crypto, that supposed revolution in finance, is lagging behind like a three-legged dog trying to keep up with greyhounds. Now, the financial media is scrambling to explain this to you in complicated ways because, God forbid, you might actually understand what's happening and stop paying them $300 a year for their newsletters. But I'm going to do something radical. I'm going to tell you the truth. And the truth is simple enough that my 8-year-old grandson could understand it, which is precisely why most professional investors never will. Here it is. We are watching the oldest story in human history repeat itself. The only thing that's changed is the costumes and the special effects. If you can master these 5 principles, you'll understand more about investing than 95% of the people managing money on Wall Street. And that's not because you're a genius. It's because they're spectacularly good at being wrong. So buckle up. This isn't going to be comfortable. But comfort is what got most people into financial trouble in the first place. Let me ask you something, and I want you to really think about it. When has a government in the history of civilization ever voluntarily chosen to reduce its spending and live within its means? When has any political body facing the choice between fiscal discipline and monetary expansion chosen the hard path over the easy one? When has any central bank said, you know what, we're going to let this recession run its course and not intervene? Exactly. It's never happened. Not once. Not ever. And yet, every single generation of investors acts shocked when their government decides to print money rather than make hard choices. It's like being surprised that water is wet or that politicians lie. It's like expecting a gambling addict to suddenly develop self-control just because you gave them a stern talking to. The dollar is weakening right now for the same reason the Roman denarius weakened, for the same reason the French assignat collapsed, for the same reason Weimar Germany's Papiermark became worthless, for the same reason every fiat currency in history has eventually disappointed its holders. Because the people in charge have discovered they can solve today's problems by creating tomorrow's disasters. They've learned they can buy votes today with money that will be worth less tomorrow. They've figured out that the political cost of austerity is immediate and certain, while the economic cost of inflation is delayed and diffuse. Here's the dirty secret nobody wants to admit, the truth that makes economists uncomfortable at dinner parties. Dollar weakness isn't a failure of policy. It's the policy. It's not an unfortunate side effect. It's the intended mechanism. It's what happens when you have a system where the people who benefit from inflation aren't the people who suffer from it. The government borrows money, spends it on programs that buy political support, and then pays it back with cheaper dollars. It's a beautiful scheme. Really, you're the one doing the borrowing. Meanwhile, you, the productive citizen, the saver, the person who believed the social contract meant something, you get to watch your purchasing power evaporate like morning dew under a harsh sun. You worked for those dollars. You saved those dollars. You saved those dollars. You thought those dollars represented stored value, stored time, stored effort. But they don't. They represent a claim on a shrinking pie, and the government controls the recipe. Think about it this way. If you have $100,000 in savings and the government increases the money supply by 50%, you still have $100,000 in your account. The number doesn't change. Your bank statement looks exactly the same. But your share of the total money supply just got diluted by a third. Your slice of the economic pie just got smaller. And here's the kicker. You didn't do anything wrong. You didn't make bad investments. You didn't gamble. You didn't speculate. You simply held dollars, which is exactly what you were told to do by every financial authority figure in your life. This isn't complicated economics. This is theft in slow motion, dressed up in doctoral dissertations and FOIA statements. It's pickpocketing performed by PhD economists using multisyllabic words like quantitative easing and accommodative monetary policy and supporting aggregate demand. They make it sound technical and necessary and complex because if they called it what it actually is, devaluing your savings to paper over fiscal irresponsibility, people might object. Now everybody's excited about metals rallying. Gold's up, silver's up, copper's doing backflips. And the financial press is writing breathless articles about the metals supercycle, as if they've discovered some new law of physics. CNBC has brought out their special graphics packages. Bloomberg is interviewing mining executives every hour. Your neighbor who couldn't find Chile on a map 6 months ago is suddenly an expert on copper supply chains and lithium deposits. And every financial advisor with a pulse is sending out client newsletters explaining why you should have 5% of your portfolio in precious. Let me disabuse you of this notion right now before you go. Do something stupid with your money, based on a fundamental misunderstanding of what's actually happening. Metals aren't going up. Your dollars are going down. This is the oldest trick in the monetary playbook, and people fall for it every single time like clockwork, like moths to a flame, like lemmings off a cliff. When the dollar loses value, it takes more dollars to buy the same ounce of gold. That's not gold getting more valuable in any meaningful sense. That's your currency getting less valuable. It's the same ounce of gold it was last year, last decade, last century. The atoms haven't changed. The molecular structure is identical. The weight is the same. The chemical properties are the same. What's changed is your measuring stick, and your measuring stick is shrinking faster than an ice cube in the Sahara. Think about it this way and really let it sink in, because this is the key to understanding everything that's happening right now. An ounce of gold today will buy you roughly the same amount of goods and services it bought you 50 years ago. Maybe a decent suit, maybe a few weeks of groceries for a family, maybe rent for a nice apartment for a month. The purchasing power is remarkably stable across decades and centuries. But the number of dollars required to buy that ounce, that's gone from $35 in 1971 to over $2,000 today. Did gold suddenly become 57 times more valuable? Did someone discover new properties of gold that make it more useful? Did gold suddenly cure cancer or solve climate change? No. The dollar became 57 times less valuable compared to real assets. The answer is obvious to anyone who's willing to think about it for 30 seconds instead of just reacting to headlines. You know what I love about gold and always have? It's the same thing I loved about it in 1960, and it's the same thing I'll love about it in 2060 if I'm still around to haunt you people from beyond the grave. You can't print it. You can't create it with a congressional vote. You can't summon it into existence by having the Fed buy treasury bonds You can't mine it faster just because some politician promises free health care or free college or free anything to everyone. You can't legislate it into existence. You can't tweet it into being. It exists independent of human stupidity, which is a rare and valuable quality in this world of ours, where stupidity seems to compound at rates that would make Einstein jealous. Now we get to the entertaining part, and the part where half of you are going to get angry at me, but I don't particularly care because I've been right about this from the beginning. Cryptocurrency, Bitcoin, Ethereum, Dogecoin, all the various digital tokens and coins and whatever else people are calling them these days. I've been asked approximately 10,000 times over the past decade what I think about cryptocurrency, and my answer has remained delightfully consistent, and I'm proud of that consistency because it means I haven't been swayed by hype or peer pressure or the sight of other people making money, something I think is fundamentally worthless. I've been criticized for being too harsh on crypto, and perhaps I have been harsh, but harshness is sometimes what's needed when you see people about to drive off a cliff. People tell me I'm too old to understand it, that I'm stuck in the past, that I just don't get the technology, that I'm a dinosaur who can't comprehend innovation. Young people with more confidence than experience and more Twitter followers than investment results lecture me about how blockchain is going to revolutionize everything from finance to healthcare to supply chains to voting systems, firing chains. They tell me I'm like the people who didn't understand the internet in 1995 or who thought automobiles would never replace horses. They tell me I'm on the wrong side of history and that future generations will laugh at my ignorance. Let me be absolutely crystal clear about something before we go any further, so there's no confusion about my position. I understand the technology perfectly well. I understand distributed ledgers and cryptographic hashing and proof of work and proof of stake and smart contracts and all the rest of it. I've read the white papers. I've talked to the engineers. I understand how it works mechanically. What I don't understand and what I will never understand is why anyone thinks a string of computer code is going to be worth something when people are genuinely worried about putting food on the table next month or keeping the lights on or paying their mortgage. What I don't understand is why this particular application of cryptography should be worth trillions of dollars, when there are thousands of other applications of cryptography that are equally impressive technically, but worth nothing as speculative assets. Here's the thing that should be making crypto enthusiasts very, very nervous right now if they're paying attention to what markets are actually telling them. The dollar is weakening. This is happening right now as the exact scenario that was supposed to send Bitcoin to the moon, the prophesied moment when digital gold would shine brightest and prove all the skeptics wrong, the vindication that crypto believers have been waiting for since 2009. And yet, crypto is lagging behind. It's not acting like gold. It's not acting like silver. It's not acting like copper or any other hard asset. It's acting like a speculative tech stock that just realized it has no earnings, no cash flow, no physical assets, no competitive moat, and no reason to exist except the momentum of people buying it, hoping to sell it to someone else at a higher price tomorrow. Let me tell you about a pattern I've watched repeat itself for decades now. Actually, I've watched it for nearly a century, which gives me a perspective that most people don't have and can't have unless they live as long as I have. I've seen this movie so many times I can tell you what happens in the next scene before the actors even enter the stage. I can tell you the dialogue before it's spoken. And yet, despite having seen it dozens of times, people keep buying tickets to watch it again as if somehow this time the ending will be different. Someone invents something new and complicated, something most people don't really understand, but sounds impressive at cocktail parties. Early adopters who get in when nobody's paying attention make money, sometimes enormous amounts of money. The media starts covering it breathlessly with special reports and expert panels and graphics packages that make it look important. Your dentist starts giving you investment advice about it while cleaning your teeth. Your barber mentions it while cutting your hair. Your neighbor who barely graduated high school is suddenly an expert on some technical subject they couldn't have explained 6 months ago. Prices go parabolic as everyone piles in because they don't want to miss out on the fortune everyone else seems to be making. Reality eventually reasserts itself the way reality always does, because mathematics and economics don't care about narratives or excitement or how many people believe in something. Everyone loses money except those early adopters who got out in time. Everybody acts shocked and outraged and demands that someone be held accountable for their own bad decisions. Nothing is learned by the vast majority of participants. And then we wait for the next new thing to come along and repeat the exact same pattern with slightly different details. We've seen this with tulips in Holland in the 1630s, where single bulbs sold for more than houses. We've seen it with the South Sea Company stock in 1720, where even Isaac Newton lost a fortune and famously said he could calculate the motions of heavenly bodies, but not the madness of man. We've seen it with Florida swampland in the 1920s, sold to people who never even visited the property they were buying. Seen it with dot-com stocks in the late 1990s, where companies with no revenue and no path to profitability traded at billions of dollars in market value. We've seen it with mortgage-backed securities in 2007, where people convinced themselves that housing prices could never go down, and that you could slice and dice risk until it disappeared. And now we're seeing it again with crypto and NFTs and whatever else comes next. The names change. The technology changes. The jargon changes. The buzzwords get updated for modern audiences. But human psychology, that never changes. Not one bit, not one iota, not in 2,000 years of recorded history. So what should you actually do with all this information I've given you? What's the practical application of everything I've just told you about dollar weakness and metals and crypto and human nature? This is the point in the speech where most financial experts would pivot to selling you something. This is where they give you some complicated proprietary strategy involving option strategies and currency hedges and sector rotation and tactical asset allocation and all manner of other nonsense specifically designed to make you think. Investing requires a doctorate in mathematics or access to secret information that only professionals have. This is where they tell you about their newsletter or their fund or their exclusive membership program that will teach you the secrets the rich people don't want you to know. I'm not going to do that. I'm going to do something much more valuable. I'm going to give you the actual secret to building wealth, the strategy that really works, the approach that has created more millionaires and billionaires throughout history than every complicated trading system and hedge fund strategy combined. And I'm warning you right now, before I even tell you what it is, that it's going to disappoint you tremendously. It's going to bore you. It's not exciting. It's not new. It's not innovative. It won't make you rich next Tuesday or next month or even next year. It won't give you something to brag about at parties. It won't make you feel like a genius or like you're part of some exclusive club that knows something other people don't. But it works. It's worked for centuries. It worked for the Rothschilds in banking. It worked for John D. Rockefeller in oil. It worked for the Walton family in retail. It worked for Warren and me in insurance and investments. And it will keep working long after cryptocurrency has been relegated to the dustbin of financial history alongside tulip bulbs and beanie babies and all the other manias that seem so important at the time. Here it is, and I want you to really pay attention, because this is the accumulated wisdom of nearly a century of watching markets and studying human behavior and making and losing and making again enormous amounts of money. Own things that produce real value. Hold them for a long time. And by a long time, I mean decades, not months or years. Don't do stupid things. And by stupid things, I mean chasing fads or using leverage you can't afford or investing in things you don't understand. And wait, just wait. Let time and compounding do the... Let me leave you with this. You have a choice to make right now. You can keep chasing stories, following crowds, and hoping that this time will be different. Or you can do something radical. You can think for yourself. The dollar is weakening because governments have chosen the path of least resistance. Metals are rallying because people are remembering that you can't print reality. Crypto is lagging because when things get real, people want real things. These aren't mysteries. These are just the universe reminding you that fundamentals matter, that arithmetic matters, and that 2,000 years of human nature isn't going to be overturned by a blockchain. So here's my challenge to you. Go home tonight and look at your portfolio. Ask yourself honestly what percentage of it you actually understand, not what your financial advisor told you. Not what some YouTube personality promised you, what you actually genuinely understand. If the answer makes you uncomfortable, good. Discomfort is the beginning of wisdom. Now stop being stupid, start being sensible, and remember, the best time to prepare for a crisis is before it happens. The second best time is right now. Any questions?